Are you like most Americans right now and want to buy a house but don't have 20% for a down payment? I'm going to show you how to get a house without one. What's going on, guys? Ryan here, Director of Operations at Boselli Brothers Real Estate. If you ever thought that a substantial down payment was the only way for you to get real estate or property ownership, think again. Today, we're opening the door to a world of possibilities for securing a property without a traditional 20% down. Let's dive into a world of alternate loan products, creative financing, and more. If you guys enjoy this video, please like and subscribe to our channel and drop a comment on what loan products you like to use and what works best for you, or what creative finance strategy you like best. It really helps us grow and help share our mistakes so that you don't also have to make them. Now, many of you are probably asking at this point of the video, what are the other loan products, Ryan? Let's get into it. It's not just about the conventional option. Guys, there is more loan products out there than shapes of snowflakes. First, FHA loans, backed by the Federal Housing Administration, are a popular choice for first-time home buyers. They offer a low down payment requirement, around 3% of the purchase price, making it a fantastic option for people that want to get involved with real estate with less cash. Now, these properties will need to be move-in ready and can't be a fixer-upper. Similar to a FHA loan, there's an FHA 203K loan. This is for your fixer-uppers. It allows you to roll the cost of the home improvement into the loan, making it an excellent strategy for turning that diamond in the rough into a polished gemstone. This is a great option if you have good construction knowledge but a lack of funding. Next is the VA home loan, my personal favorite because I am a United States Marine Corps veteran, so I have access to it. All you other vets out there, please give us a comment if you've used your VA loan and tell me how it's worked out for you. The VA loan, for you, those of you who don't know, is offered specifically to veterans and service members for a zero down payment out-of-pocket cost to get involved in your real estate. The VA loan is a big government thank you for your service, so definitely take advantage of it. There are a lot of rules and regulations of when you can use this loan. For example, you need to live in the property for at least a year after you use it, and you can only have one opened at a time, but it's unbelievably powerful for your personal residence. $0 out of pocket to own a house, that's a win in any book, and that doesn't exist anywhere else. Next, we have DSCR loans, or debt service coverage ratio loans. These are a great fit for your income producing properties, especially your duplex to quadplex. The bank will focus on the property's ability to make money and not so much your credit or your income. Now, these might be a little higher interest rate than your typical convention or FHA loan, but it allows you to close these loans without credentials and credit checks. Next, we have your LLC loans. Are you forming a limited liability company for your real estate? LLC loans provide financing specifically for those LLCs and these business entities, giving you flexibility and protection. If you're thinking about setting up an LLC for your rental properties, please check out our video linked below. Now, beyond these loan products that I've outlined here, there are other ways to fund your real estate. Each has its own unique benefits and drawbacks. So don't hesitate to reach out to some banks or lenders and ask what they have to offer in terms of loan products. Next thing I want to talk about is forced appreciation, or the rehab strategy. This is very similar to a bbre, but you can also do this to live in the property as well. This allows you to enhance your property's value through renovations and improvements, effectively substituting your need for a large down payment. If you own the property outright and your purchase price and your rehab is less than 75% of loan to value, you can perform a cash out refinance and recapture the capital that you used for your initial investment. This is called forced appreciation, and when you refinance the money out, very commonly called a bbre method. But who said you need to use a bank at all? Your personal network, like your friends and family, can be a valuable source of funding. Just ask, they may be willing to invest in your real estate deals, allowing you to secure the property without a traditional down payment or financing. You may think no one will invest in your projects from your personal network, but you're probably wrong. That exact scenario is how we got started. And a ton of other investors have the same story. Guys, you're not asking for a handout. You're providing an investment opportunity that's different than the stock market. They don't have access to deals like this, but you can bring them one. But remember, guys, when you start handling your friends and family and other investors' money, you need to really make sure you know what you're doing. It's immoral to collect and invest money for other people when you don't truly know what you're doing. It's your responsibility to educate yourself and ensure you fully understand the dynamics before you jump in. Being reckless with your money is bad. Being reckless with other people's money is immoral. And finally, creative financing strategies. Let's get innovative. Seller financing subject to lease options and more. Guys, I can't emphasize how many options and how much money is at your fingertips. You just need to go out there and find it. Next, I want to look at your debt service and your monthly payments. Keep in mind, the smaller down payment you use on a property will mean a higher monthly payment, especially in an environment with elevated interest rates. Always look at the potential rent your property can generate and make sure there's a nice delta between your monthly payment in your gross revenue. You are gonna need to have some money for operating expenses, so make sure that's not barely covering the mortgage. And my final words of wisdom here, as you embark on your real estate journey, remember knowledge is your greatest asset. Research your options, evaluate your financial situation, and choose the strategy that aligns perfectly to you and your goals. So now that you've unlocked the door to property ownership without a 20% down payment, start calling lenders and evaluate your options. And that's going to do it for this video, guys. Please like, comment, and subscribe to our channel. Head over to our website, BoselliBrothersRE.com. Subscribe to our newsletter for all things investing and real estate. As always, it's 100% free. Please help us reach out to as many investors as possible. Share our journey so that you guys don't make the same mistakes that we had to make. That's going to do it for this video. Once again, I'm Ryan. See you next time. I don't like that line. Money out, very similarly called. Yeah. Camera angles.